This has become more often than not something that is included in many high technology companies when they go public. Do you think you have any hopes of changing sort of what has, again, as I said, become something that is common?
Well, thanks for having me. First of all, it's true that dual class structures are not uncommon, but what's uncommon about what Lyft is doing is they don't have a sunset provision. So unlike Groupon or Kayak or Fitbit that have sunset provisions that are based on an amount of time, 3, 5, 7 years, or based on a percentage of the shares that the insiders no longer own, that would then create one class of shares. What Lyft is doing here is saying we're going to have into perpetuity these super shares for the founders and their families.
Yeah, it's a good point. I'm glad you raised it. I believe Pinterest, to your point as well, will have sunset provisions associated either with ownership or actual time at the company if some of the insiders are no longer working there. But from your perspective, why not just say, OK, I'm going to take a pass on this stock because I don't like the governance provisions?
Well, I think it's an important precedent for the market. And there are three issues here. One, it's good corporate governance. The fundamental concept of one share, one vote is fundamental to good corporate governance, and it aligns interests between stockholders and management. Two, performance. And as a potential investor and as other investors look at this, there have been several studies, including one by SEC Commissioner Jackson, that showed that there may be a pop in the IPO in the first couple of years, but empirically, over the next 3 to 5 years, you see these shares that have perpetual dual class structures perform at a discount. And finally, here in Chicago, we have 57,000 rideshare drivers versus 4,000 licensed taxi operators. That means that this is an important part of our transportation mix and an important part of our economy. And to have an industry leader like Lyft that plays such an important role in both the jobs and transportation in a city like Chicago or New York, who's a signatory to this letter, or LA, it's important for us to think about the sustainability of their future as a company and their business operations.
On the flip side, Kurt, just to play devil's advocate here, some might argue that having more founder control over a company does insulate them from the so-called short-termism in the markets right now, the pressure to get on earnings, the activist pressure, and lets them think more long-term about the vision and growth of a company.
Yeah, what I would respond to that is there's no lack of innovation at Amazon. There's no lack of innovation at Apple. There's no lack of innovation at the more than 90% of the companies that are publicly traded that have single-class shares. And that's also why you have a period of time to sunset, whether that's 3, 5, 7, 10 years. There's an opportunity for the founders to continue to innovate without undue interference from hedge funds or activists or the capital markets. But ultimately, when you transition as a company and you are able to align your interests directly with those of your shareholders who control the majority of the economic stake of the company, it doesn't stifle innovation, and there are plenty of examples of that.
Yeah, well, there are also examples of controlled companies where there's no lack of innovation. I mean, Facebook and Alphabet have done pretty darn well, both of which have dual class structures.
Sure. I mean, I think that's right. I would argue that the jury's sort of still out on Facebook. I think Alphabet has done a good job, but in this case, you have 7% of the ownership owning 60% of the voting rights, which is below the threshold at 7% of most of the sunset provisions that exist, and they're lower than most of the other dual class structures where the insiders still own more than single-digit ownership of the company.
So you're saying that, I mean, I was trying to find a study in preparation for this interview that definitively linked the dual class structure to weaker performance in the long term in the stock market. It's pretty inconclusive. There are some that are negative and there are some that are positive.
Yeah, I could point you to several, but the one that I would point you to follows a speech that SEC Commissioner Jackson gave last year about the challenge of dual class structures. And what he said is that it's not uncommon for us to put our faith in founders. But what perpetual super shares are asking us to do is to put our faith in our founders' children and grandchildren. And I think that's unreasonable. And the data supports that over the long run, those stocks that do this trade at a discount.